Good morning, students. Today we are going to cover the second and the last part of Ind AS 105, non-current assets held for sale and discontinued operation. To start further, let me recap the last class in the next 5 to 10 minutes. Okay. So students, in the last class, we have discussed that non-current assets held for sale denotes that if any non-current asset which is held for sale means if the held for sale criteria is met. For example, if there is a property, plant and equipment, investment property, intangible assets, right, biological asset, if these assets are being held for sale, then it has to be presented, classified and measured as per Ind AS 105. First of all, when I'm talking about the recognition criteria under this standard, it means that when a non-current asset held for sale comes under Ind AS 105, it means that the objective of the company from that particular asset is not to use. The objective of the company from that particular asset is to sell. And that is why we have seen that whenever a normal asset, when I'm saying normal asset, I mean to say property, plant and equipment, intangible asset, investment property, biological asset, if these assets are held for sale, then from the date of classification as held for sale, depreciation and amortization will be stopped, right? Number one. Number two, when a non-current asset is classified as held for sale, then it has to be shown under current asset category, not under non-current asset category, right? That is number two. Number three, when an item will be classified as held for sale, when two conditions ISPC plus HP will met. ISPC means it is available for sale in immediate, it is available for immediate sale in present condition. ISPC, available for immediate sale in present condition. And sale must be highly probable. So if you understand these two indicators, these two conditions, you must understand that this asset is available for immediate sale in present condition and the management and the company has an intent and ability to sell that asset. Then we discuss sale is highly probable, which also reflect that management is already committed to sell the asset, right? The management has already started searching the buyer of that asset. The management has quoted a reasonable price. It means the background working has already been done and management has already quoted a reasonable price. Management is expecting that the sale transaction will complete within 1 year from the date of classification as held for sale, except two conditions, which is considered as an exception to 1 year rule. The two conditions were, if due to unexpected circumstances, the sale transaction become delayed like COVID. And of course, this unexpected circumstances should not be within control of the entity, should be outside the control of the entity. Second, if the delay is caused by the buyer himself, because buyer wants to get some improvements, buyer wants to get some corrections, and that is why buyer is telling to the seller that you please fix this problem. But fixing the problem will delay the sale from more than 1 year. In that case, it is again an exception to 1 year rule, provided in this case, the firm purchase commitment, the binding agreement must have been entered with the buyer. So if you are a CA final student, let's say, and you have went to the audit, right? And when the client has classified an item as a non-current asset held for sale and 1 year has gone, but still the client is showing it as a non-current asset held for sale, you need to ask for binding agreement. Where is the agreement? Have you entered any agreement with the buyer? If you will say yes, then you need to look at the agreement. You need to look at the penalty clause, right? If in the agreement it is written that the buyer and seller are allowed to walk away from the contract, they can cancel the contract without any penalty. In that case, it will not be considered as a binding agreement, right? So we discussed the held for sale criteria in the last class. Okay, that is recognition. Then we discussed the presentation and we discussed non-current asset has to be classified separately on the balance sheet as a separate line item under the current asset category. Okay. Then we discussed Then what we discussed? Then we discussed our accounting part. And in the accounting part, we discussed that when a non-current asset is classified as held for sale, on that date, you have to compute the carrying value as per the respective standard. Means if it is a PP, please compute the carrying value on that date after deducting accumulated depreciation, after deducting accumulated impairment losses. Please compute the carrying value on that date. Please compute fair value less cost to sell on that date. Whatever value is lower, right? At the lower value, you need to recognize non-current asset held for sale. You need to credit your existing asset. You need to debit your non-current asset held for sale. And if your fair value less cost to sell is lower than the carrying value means the value which is coming in the books of accounts. In that case, the loss, the difference will go to impairment loss in the P&L, right? Friends, if the asset remain unsold on the reporting date, in that case, it will again subsequently measured at fair value less cost to sell. It will again subsequently measured at fair value less cost to sell, right? Sir, if there is a decrease in fair value less cost to sell, then you need to again compute the impairment loss, right? You need to recognize the impairment loss once again. But if there is an increase in fair value less cost to sell, in that case, you need to recognize the increase only to the extent of previous decrease, only to the extent of previous decrease, right? This is what is given in the standard. Okay, so this is what we have discussed, and we have also discussed that once an asset will be classified as non-current asset held for sale, in that case, the depreciation and amortization will be stopped automatically. And we have also discussed that if the company is expecting that the sale may go beyond 1 year, in that case, cost to sale has to be discounted to the present value, right? This is what we have discussed in the last class, right? And as I told you in the last class, that this entire standard will be divided into three parts. One is non-current asset held for sale, means individual asset held for sale. Then we discuss disposal group held for sale, where the group of assets are held for sale. And this group of asset may include current asset as well as liabilities. Then the third part is discontinued operations, right? So in the last class, we have done this accounting part in detail, right? In the last class. Now let's discuss one of the case study on classification as non-current asset classification as held for sale, right? And this case study I'll cover from my PPT. Okay, this is also part of your ICAI study material. We have also discussed the concept of abandoned asset, right? Abandoned assets are those assets which are not in use, Why it is not in use? It is not in use because it is not in use. Why? Because of the demand, because the demand is not there and hence it is not in use. Okay. Let's discuss this question from ICAI study material. I hope this PPT is visible to all of you. Is it visible? Okay. Good morning, Shailesh. Good morning, Ravi. Good morning, Rahul. Measurement prior to classification as held for sale. Entity ABC owns a property. Entity ABC owns an item of a property and it was stated at the following amount in its last financial statements. On 31st March 2001, the cost is 12 lakh, the depreciation is 6 lakh, and the net book value is 6 lakh. The asset is depreciated at an annual rate of 10%, that is 1,20,000 per annum. Entity ABC closes its books as on 31st March each year. During July 2001, entity ABC decided to sell the asset, and on 1st August, it met the condition to be classified as held for sale. So on 31st March 2001, the cost is given, the depreciation is given, the net book value is given, right? And per annum depreciation is 1,20,000. And this entity decided to sell this asset on 1st of August. Means we need to compute the carrying value on 31st July as per Ind AS 16. So in this question only the information about depreciation is given. So it means we need to compute the depreciation for further 4 months, April, May, June, July. So if the per annum depreciation is 1,20,000, what is the depreciation for 4 months, that is up to July 2001? What is the depreciation? What is the depreciation, Ravi? If per annum depreciation is 1,20,000, what is the depreciation for 4 months? Slash, what is the depreciation for 4 months? You are right, Radhika. It is 40,000. 40,000. It means what is the carrying value as on 31st July 2001? 6 lakh minus 40,000, which comes out at 5 lakh 60,000. Right? This is the carrying value. Please see the answer. Answer is at 31st July, entity ABC should ensure that the asset is measured in accordance with Ind AS 16. It should be depreciated by further 40,000 and should be carried at 5,60,000 before it is measured in accordance with Ind AS 105. From the date the asset is classified as held for sale, no further depreciation will be charged. No further depreciation will be charged. Right? Clear? Good morning, Abdul. Yes. What is meant? Let's discuss quick question, right? What is meant by non-current assets held for sale? Non-current assets held for sale are those assets where the carrying amount is principally recovered through the sale transaction, not through the continuing use. What are the criteria for classifying the asset or disposal group held for sale? There are two criteria. Number one, the asset is available for immediate sale in present condition, and sale must be highly probable. And sale must be highly probable consists of 5 conditions. Number one, management is committed to sell. The management has started searching the buyer. The asset is marketed at a reasonable price. The sale is likely to complete within 1 year, and it is unlikely that the sale plan will change. Third, whether asset temporarily taken out of use is termed as abandoned or classified as held for sale. The asset temporarily taken out of use is termed as abandoned asset. What are the measurement provision for assets which are classified as held for sale? The measurement requirement is on the date of classification as held for sale, you need to compute the carrying value, you need to compute the fair value less cost to sell, and whatever is the lower the asset has to be, non-current asset held for sale has to be measured at that value. If there is any loss, it will go to the impairment loss in the P&L. Subsequently, it has to be recognized and measured at fair value less cost to sell, and if there is a further loss, it will go to impairment loss in P&L. If there is a further increase, the further increase has to be recognized to the extent of previous impairment losses. The previous impairment losses includes impairment losses under the previous standard plus impairment losses on classification as held for sale, right? So impairment losses under Ind AS 105 plus impairment losses under 16, 38, 40. So that has to be clubbed and seen from the perspective of recognize the increase in fair value less cost to sell, right? So friends, let's just this part, right? And while discussing this part, this case study, we will complete the first aspect, which is my non-current asset held for sale, right? So I'll complete this part after completing this case study. I believe this case study number 1 is visible to all of you. Let's quickly discuss and understand this case study, right? Very, very, very important. And this is also there in your ICAI study material. A property is purchased for rupees 5 lakh on 1st April 2018. The useful life of the property, please read the question with me. A property is purchased for rupees 5 lakh, means cost is rupees 5 lakh. Date of purchase is 1st April 2018, right? In examination, when you will attempt the question, please start underlining your question paper, right? Once you read the question, please start underlining your question paper, right? Underline your question. For example, when you're reading the first line, Please register one thing in your mind, that this property is purchased means property is a like land and building. Okay, this is a property for rupees 5 lakh, right? Cost is 5 lakh. On 1st April 2018, it is the date of purchase. The useful life of the property is 20 years, zero residual value. So what should come into your mind after reading this line? What should come in your mind? In your mind, it should come like, okay, 20 year is the life, but no residual value means 5 lakh divided by 20. 25,000 is per annum depreciation. We got three information: cost of the asset, date of purchase, useful life, depreciation. The property is measured subsequently at the depreciated historical cost. The property is measured subsequently at depreciated historical cost, means cost model. Okay, means it is a property, plant and equipment. Cost model is there. 25,000 is per annum depreciation. 5 lakh is cost. Date of purchase is 1st April 2018. This is all sort of information which we have gathered after reading paragraph number 1. On 30th September 2020, so it is talking about the next date, 30th September 2020. The earlier date was 1st April 2018. Means it is talking about after 2.5 years, 1819, 1920, 30th September 20. It is talking about 2.5 years, right? After date of purchase, it is talking about after 2.5 years. It is decided that the property is to classified as held for sale. Classification criteria are met, means on 30th September 2020, in this property becomes available for immediate sale in present condition, and management feels that the sale is highly probable on 30th September 2020. So after reading the second paragraph, one thing should be clearly came into your mind, that this property is moving from Ind AS 16, property, plant and equipment, to Ind AS 105 on 30th September 2020. The another thing which should came in your mind immediately, that, oh, on 30th September 2020, I need to compute, I need to calculate the carrying value. I need to calculate the carrying value of this property. I need to calculate the carrying value of this property, right? As per Ind AS 16. It means I need to compute the depreciation as on this date. Friends, what is the accumulated depreciation on 30th September 2020? If per annum depreciation is 25,000, and this depreciation we need to compute for 2.5 years. So what is the total depreciation? What is the total depreciation? The total depreciation is, you are right, Tanisha. The total depreciation is 62,500. Yes, Ravi, I am getting your comments. So the total depreciation is 25,000 for 1 year, 25,000 multiplied by 2.5, 62,500 for 2.5 years, right? This is the depreciation. Okay, so we are reading the question and we are solving the question in our mind, right? And in the note sheet, in the answer sheet, you can also write important information. You can write in the solution part, you can write information given in the question, right? And then you will start solving. Now the third paragraph says that an impairment assessment on 30th September 2020 determines the recoverable value based on value in use to be rupees 4 lakh. So you have already covered Ind AS 36 impairment of asset, and now you have understood recoverable value means higher of fair value less cost to sell and value in use. So recoverable value, when your carrying value is higher than your recoverable value, then only impairment loss will come into picture, right? And for every asset, you need to compare your carrying value in the balance sheet with recoverable value, right? So what happens in this case? The impairment assessment on 30th September 2020, the company is computing the carrying value of this property as per Ind AS 16, right? So this is the last calculation as per Ind AS 16, because after that this property will move to Ind AS 105. So while computing the carrying value, the what is the formula of carrying value, Tanisha? What is the formula of carrying value, Ravi? What is the formula of carrying value? The formula of carrying value is, you're right, Neha, cost minus accumulated depreciation minus accumulated impairment losses. So what does it mean? Accumulated depreciation, we are aware, 62,500, right? And when I deduct 5 lakh minus 62,500, it comes out to 4 lakh 37,500. Whether 4 lakh 37,500 is my carrying value, or my carrying value should be 4 lakh as per Ind AS 16. What should be my carrying value? Ravi and Tanisha both are saying cost minus depreciation. That is not right. The formula of carrying value is cost minus depreciation minus impairment loss. Yeah. So Ravi, 4,37,500 is only cost minus depreciation. But if you have already read Ind AS 16, 38, 40, 36, right? So everywhere the formula of carrying value is, carrying value will be computed by deducting the depreciation till date, impairment losses as on date, right? From the cost, then only you will arrive at a carrying value, right? So this carrying value as per Ind AS 16 is not 4,37,500. This is 4 lakh. So it means 37,500 is impairment loss, right? Then in the last line, the fair value less cost to sell is also given, which is 3,90,000, which is 3,90,000. Okay. So it means the second step is also given. The step number one, how do you compute your non-current asset held for sale value? Step number one, compute carrying value as per the respective standard on the date of classification as held for sale. Step number two, compute fair value less cost to sell of that particular asset, right? Step number three, recognize or measure non-current asset held for sale at lower of step number one and step number two, right? Requirement. What is the carrying value of the property immediately before reclassification as held for sale on 30th September 2020? What is the carrying value? Step number one. What are the required accounting entries in 2020 in respect of the reclassification of the asset as held for sale? What is the required accounting entries? Okay. So friends, in this case, step number one, right? First of all, let's go to the solution and let's write step number one. Please write step number one. What is your step number one? Please write step number one. Step number one is compute carrying value on 30th September 2020 as per Ind AS 16. Cost is 5 lakh rupees. Accumulated depreciation is 62,500 rupees. The carrying value before impairment is 4,37,500 rupees. Impairment charge is 37,500 rupees. And your carrying value as per step number one, your carrying value as per Ind AS 16 is 4 lakh rupees, right? What is the accounting entry for depreciation? Depreciation account debit to accumulated depreciation. What is the accounting entry of this impairment loss? Impairment loss account debit to asset account. Impairment loss account debit to asset, right? This is my step number one. Is that clear? Is that clear? Step number one. Any doubt in step number one? We have already covered this step number one, right? Step number two. What is my step number two? Compute fair value less cost to sell, which is given in the question, 3,90,000. What is my step number three? Measure non-current asset held for sale at lower of carrying value and fair value less cost to sell. You remember these three steps which I have covered in the last class? It was there in the Excel file. Let me show you these three steps which I have already covered. Yeah. These are the three steps which I have already covered. Step number one, step number two, step number three. And I have already covered the few examples as well, right? So what is lower? 4 lakh is lower or 390 is lower? 390 is lower. So you have to pass an accounting entry. What is the accounting entry? Non-current asset held for sale account debit 3,90,000. 2. What is 2? 2 property, plant and equipment 4 lakh. Where the difference will go? Where the difference will go? The difference will go to impairment loss. The accounting entry is non-current asset held for sale account debit 3,90,000. Impairment loss on reclassification as held for sale account debit 10,000. 2 property, plant and equipment 4 lakh. This is the accounting entry which needs to be passed on the date of classification as held for sale. I hope this accounting entry, this case study, this question, this classification as non-current asset held for sale is clear to everyone, to every one of you. I hope it is clear to each one of you. Is that clear? Is that clear, friends? Yeah? Very good. So we have already covered examples and question on this particular aspect. Let's move on further. So friends, we have covered individual non-current asset held for sale, accounting part, right? We have already covered. Now friends, we are shifting to disposal group. Disposal group means group of asset held for sale. Disposal group means group of asset held for sale. Please tell me, before discussing this question of disposal group, please let me know how many of you have already attended the session on Ind AS 36 impairment of assets. How many of you are aware about cash generating unit? How many of you know how to allocate impairment loss in the cash generating unit? Please let me know. How many of you have already attended the session on impairment loss, impairment of assets standard? How many of you are aware about concept of cash generating unit? And how many of you aware about how to allocate the impairment loss in case of cash generating unit? Please let me know, guys. Okay, Nisha is saying yes, Ravi is saying yes, Yukta is saying yes, Rahul, Ridhima, Neha, everyone is saying yes. Very good. Why I am asking this question? Because the concept of cash generating unit, I mean to say allocation of impairment loss in the cash generating unit is very, very, very important to understand this disposal group concept, right? To understand the accounting of disposal group, because in disposal group it is nothing. This disposal group is only like a cash generating unit where the impairment loss will be allocated, right? You remember when we have discussed this individual asset held for sale, there is no allocation of impairment loss. Like in the recent example, in the recent case study which we have done, so there was one asset, there was one property, and when the fair value less cost to sale was lower than the carrying value, we have just charged 10,000 rupees of impairment loss. We have just charged 10,000 rupees of impairment loss on that property. But in disposal group, where the group of assets are there, and if in that group of assets 10,000 impairment loss will be there, how to allocate this 10,000 impairment loss in the group of asset? The concept is given under Ind AS 36, not Ind AS 105. But yes, the concept is same in this Ind AS 105, because Ind AS 105 says that the impairment loss on the group of asset will be allocated as per Ind AS 36, right? So Abdul and Shruti has also confirmed. Let's move on, guys, and discuss this disposal group case study. Following details are given for entity A. Okay, you can see on the screen. Goodwill, $16 million. 16 million means 1.6 crores. Property, plant and equipment, $28 million. Inventory, $20 million. Financial assets are there, $17 million. Profit of $4 million recognized in equity irrelevant. Financial assets $17 million. Financial liabilities $17 million. And the total is $67 million. Right? So what is the total of the assets? What is the total of the assets? Because liability is also there. What is the total of assets? What is the total of the assets? The total of the asset is 67 plus 14. We can say that the total of the asset is how much? 81. 81 is the total of the asset. We can say that 81 is the total of the asset, right? So 81 is the total of the asset. Okay, right. Now further, the question says that under Ind AS, property, plant and equipment, under Ind AS, property, plant and equipment would be stated at 26 million and inventory stated at 18 million. It is given that the value of PPE on the date of held for sale, you remember the step number 1? The accounting part is totally same. Again, you have to do 3 steps. Step number 1, compute the carrying value. Step number 2, compute the fair value less cost to sell. Step number 3, measure, recognize and measure at lower of step number 1 and step number 2. So the value of PP is given, the value of inventory is given, right? But the value of other assets and liabilities is not given. We will assume that the value is the same. For other assets and liabilities, the value will remain same. The fair value less cost to sell, step number 2 is also given, $47 million. Assume that the disposal group qualifies as held for sale on 31st December. You are required to show how the disposal group would be accounted for in the financial statement for the year ended 31st December 2020. So let me take you on the Excel file and let's solve this case study, right? And today you will again revise the concept of what? You will again revise the concept of allocation of impairment losses. I hope that Excel file is visible to all of you, friends. I hope it is visible to all of you. Case study 2, disposal group held for sale. This is the carrying value which is given in the question. Goodwill 16 million, property, plant and equipment 28, inventory 20, financial assets 17, financial liabilities 14, 67 is your total value, right? What is your step number 1? What is your step 1? What is your step 1? What we have discussed in step number 1? Compute the carrying value of the non-current asset held for sale or disposal group assets as per the respective standard immediately before classification is held for sale, right? These are the example 16, 38, 40. Okay. So step number 1. In step number 1, what is given in step number 1? In step number 1, the carrying value, you need to compute carrying value as per respective standard. Carrying value, revised carrying value. I can say that revised carrying value, right? Carrying value of goodwill is given. Answer is no. Only it will be only 16 million. But for PP, it was said that PP is 26 million. Sorry. Inventory, it was given that 18 million. Financial assets, nothing is given, so we'll assume 17 million. Liability, we will assume minus 14 only. Okay. And what is the total? The total comes out at 63 million. Okay. This is which is given in the question, right? Are you all okay with the question? Are you all okay with the question? Right, friends? The question is clear to all of you? Okay. So we understood this step number 1. The step number 1 is the same which we have discussed earlier. Okay. Step number 2. What is my step number 2? Step number 2. Compute fair value less cost to sell. Fair value less cost to sell is given in the question. What is that? 47 million. Is that given in the question? Is that given in the question? 47 million is given? Yes, 47 million is given. The total is given. The total is given. Okay. The total is given in the question. 47 million. Now, what is the impairment loss? What is the impairment loss? What is the impairment loss? If 47 million is the fair value less cost to sell. Step number 2, compute fair value less cost to sell. This is the step number 2, right? This is what we have read. Compute the fair value less cost to sell of NCHFS or disposal group. What is the impairment loss? What is the impairment loss? If step number 2 is 47, step number 1 is 63, impairment loss is 63 minus 47. 63 minus 47. It comes out to 16 million. It comes out to 16 million. My impairment loss will be 16 million. Now the question arises. How to allocate this impairment loss? How to allocate this impairment loss, right? And let me write here step number 2. So there is an impairment loss. Just a minute. Impairment. There is a impairment loss. Right? There is an impairment loss. And what is the value of the impairment loss? It is 16 million. Now, how to allocate this impairment loss? Please help me out. How to allocate this impairment loss? Please help me out. And it says that for allocation of impairment loss, please apply the provision of Ind AS 36. For allocation of impairment loss, please apply the provision of Ind AS 36. And you guys have confirmed me that, sir, we are already aware about Ind AS 36. We have attended Ind AS 36 session just last week only. We know what is meant by CGU. We know how to compute, how to allocate the impairment loss for cash generating unit. So we are aware about this fact. Now I am asking how to allocate the impairment loss. Please let me know how to allocate the impairment loss. Okay. Neha is saying, sir, while allocating the impairment loss, first of all, we need to adjust the goodwill. Okay. So you are saying, Neha, I should adjust the goodwill. Okay. Let me put the goodwill here. Okay. Goodwill is 16 million, right? Because 16 million is the impairment loss, 16 million is the goodwill. So what we have done, we have completely adjusted the goodwill. Okay. So my goodwill will become zero. Right? My goodwill will become zero. So what will be the revised value? Revised value of disposal group, right? What is the revised value of the disposal group? So my goodwill will be no more. It will become zero, right? It will become zero now. What is the value of PP? There is no impairment on PP because the total is only 16 million. So my revised value of PP is, so let me put the formula here. The PP, inventory, financial asset, financial liabilities, these value will be same. Because the entire impairment loss will be exhausted with the goodwill. Okay. So these value will remain same. This is the total of 47. This is the breakup of 47 of the value of the assets and liabilities of the disposal group, right? I hope everyone is able to understand this part, right? What happened if instead of 16 million, it would have been 20 million? In that case, sir, what happened? For example, extending this example, extending this example and considering the fair value less cost to sell to 43 million, right? I am extending this example. I am extending this example. I am extending this example and considering the fair value less cost to sell 243 million. 243 million. Okay. Now let's discuss this part. Earlier it was 16 million and loss was also 16 million and the goodwill was also 16 million. You have hit the goodwill. Just for the sake of your revision, I am extending this example. In this example, carrying value was same. Step one, revised carrying value was same. But let's say fair value less cost to sell become 43 million. What will be my impairment loss? What will be my impairment loss? My impairment loss will be 63 minus 43. My impairment loss will be 20 million, right? My impairment loss will be 20 million. What I did out of 20 million, out of 20 million, what I'll do? Out of 20 million, first of all, I'll hit the goodwill. I'll hit the goodwill, first of all, completely. Still, I have left with 4 million to allocate. Still, I have left with 4 million to allocate. One thing is very clear. There is no impairment of liabilities. There is only impairment of assets. All agree with me? There is no impairment of liabilities. There is only impairment of assets. Okay. Which means this liability should be outside the scope of allocation of impairment loss. Now the second part, you remember when I have already discussed this allocation of impairment loss to the cash generating unit, I have discussed that if there is a impairment loss, please hit the goodwill first. Please adjust the goodwill first from the impairment loss. If still there is impairment loss, it has to be allocated on the remaining asset on pro rata basis. But one thing you have to take into your mind while allocating the impairment loss on the group of assets, you should consider the fact that the impairment loss will not be allocated to those assets which are already at fair value, Friends, in this case, inventory. What is the mechanism of computing inventory? What is the measurement method of inventory? What is the measurement method of inventory? Yukta is saying, please allocate in the ratio of 26 to 18 is to 17. Yukta, you have forgot the concept of allocation of impairment loss. You remember what I have explained in the impairment loss standard? I have explained that you cannot allocate your impairment loss on those assets in the cash generating unit which are already sitting at fair value, right? So what is the formula for measurement of inventory? Inventory has to be measured at cost or NRV, whichever is lower. Cost or net realizable value, whichever is lower. Cost or net realizable value, whichever is lower. Right? Cost or net realizable value, whichever is lower. So what does it mean? It means inventory is itself at a net realizable value. Right? Financial assets. Financial assets are measured at fair value, right? You remember when I'm talking about the scope of measurement, I told that the financial asset, deferred tax asset, inventory, these are not comes within the purview of Ind AS 105 as far as measurement is concerned. Inventory is at fair value, financial asset is at fair value, means on these assets impairment loss is not going to be allocated. The remaining impairment loss, where to allocate? Remaining impairment loss will be allocated to property, plant and equipment only. Property, plant and equipment only. What is the revised value of disposal group? The revised value of the disposal group is for goodwill 0, for PP 22 million, and 18 million for inventory, 17 million for financial assets, and 14 million for liability. So it comes out at 43 million. This is how this impairment loss needs to be allocated. Right? Friends, please let me know if you have any question. The disposal group is very simple. Very simple means the concepts are exactly same. The concepts are exactly same. Step number 1, compute carrying value as per the respective standard of the respective asset in the disposal group. Step number 2, compute fair value less cost to sell of the disposal group. Now allocate, if there is any impairment loss, allocate the impairment loss on the disposal group, on the assets of the disposal group. Right? How to allocate? Please apply the principles of Ind AS 36 impairment of assets. the principles of allocation of impairment loss to the group of assets. Clear? Is it clear or clear? Is it clear in mind or clear from mind? Other did not because they are on fair value. Yes, Ravi. As I told you, inventory is already on the net realizable value, right? The financial assets are already measured at fair value on the reporting date. Fair value means the value on the market, value in the market. Yeah. Rahul is asking, sir, let's say if intangible asset would be there in this question, right? And the value of the intangible asset is just like a PP. In that case, sir, whether we should allocate the impairment loss on intangible asset also? Yes, Rahul, you have to allocate the impairment loss on intangible asset also, right? Intangible asset also. Intangible asset is just like a PP. If sir, if there would be investment property, of course, yes, investment property, you need to allocate impairment loss on investment property also. Okay. Yeah. Clear? Let's say, let me let me further extend this example. Further extending this example so that you guys are completely clear. Further extending this example. Further extending this example by replacing inventory with intangible asset, and considering the fair value less cost of sale 43 million. So I am replacing this inventory with intangible asset. Okay. So now it become intangible asset. Now please tell me what will be your answer. Now tell me what will be your answer. Impairment loss is 20 million. How to allocate this impairment loss? First of all, goodwill, right? Then in the remaining asset on the pro rata basis. But while allocating on the remaining asset, ensure that if the asset is already on the fair value, right, realizable value on that asset, impairment loss is not going to be allocated. Or you remember one more concept I have told you. If the recoverable value of individual asset is given, in that case, that individual asset has to be come to the recoverable value, right? For example, the recoverable value of the intangible, if you will take the individual asset recoverable value, the impairment loss is coming out at only 2 million, let's say. But while allocating on a pro rata basis, the impairment loss is going to be allocated for 3 million. In that case, you cannot allocate more than 2 million. Why? Because while allocating the impairment loss to the group of asset, the value of the individual asset should not go below its individual recoverable value. That is why if the asset is already at fair value, you are not required to charge any impairment loss. If the asset's recoverable value is known, you are not required to charge impairment loss more than its individual impairment loss, right? What to do in this case? Please tell me quickly what to do in this case. Now I have replaced inventory with intangible asset. How to allocate this 4 million? Please tell me quickly. How to allocate this 4 million? Absolutely right, Ritvik. This 4 million has to be allocated pro rata in the ratio of 26 is to 18. In the ratio of 26 is to 18. How to allocate? Minus 4 multiply by 26 divide by 26 plus 18, divide by 26 plus 18, right? This plus this 2 million. Again, minus 4 multiply by 18, divide by 26 plus 18, 26 plus 18, 2 million. Okay. It will be in the decimals. I have just keep it on the absolute number. without decimal. So this is the allocation of impairment loss. What is the revised value? The revised value of goodwill will become 0. The revised value of PPE is 24 million. The revised value of intangible assets is 16 million. Financial assets 17 million. Financial liability 14 million. And this is the allocation of 43 million. This is the allocation of 43 million. Is that clear? Is that clear? Very good. Very good. So this disposal group, I have covered three examples of disposal group. The case study from PPT, then again I have extended this example, and then again I have extended this example. Right? I hope now things are very much clear to all of you. Okay. This is how this entire thing has to happen. Now the second requirement was you are required to show how the disposal group would be accounted for in the financial statement for the year ended this, and the presentation requirement also. So friends, the revised carrying value as I shown you, the revised carrying value. If you will see the revised carrying value, what is the value of the asset? The value of the asset is 61 million. And what is the value of liability? 14 million. Net value is 47 million. So the asset has to be shown on the asset side. The liability has to be shown on the liability side, right? So the presentation in the balance sheet would be like this. If you will see in the current asset, non-current asset or disposal group classified as held for sale 61 million. In the liability side, current liability. Liability is directly associated with non-current asset or disposal group classified as held for sale. This is how this presentation has to happen, right? So asset has to be shown on the asset side. Liability has to be shown on the liability side. Clear? Is that clear, friends? So let me show you on the Hindalco, in the balance sheet of Hindalco Industries Limited as well. Please confirm if the balance sheet of Hindalco Industries will be visible. Please confirm once it will be visible. Oh, just give me a time. So I'm opening the Hindalco Industries balance sheet. I hope this Hindalco Industries balance sheet is visible. Is it visible? This is the balance sheet of Hindalco Industries Limited. Okay. I believe it is visible to all of you. Yes. So let me show you in the Hindalco Industries balance sheet, there is the asset. In the asset, non-current asset is there. Then current asset is there. Then non-current asset or disposal group classified as held for sale. You can see on the current asset side, they have given non-current asset or disposal group classified as held for sale, right? Then in the liability side, you will also find this fact in the liability side. This is the current liability, right? So the non-current liability is also there. This is the current liability. In the current liability, liability associated with disposal group classified as held for sale. Liability associated with disposal group classified as held for sale. Right? So this is what I have shown you in that disposal group case study also. So this is asset, this is liability. Clear? Is that clear? I hope it is clear to all of you. Yes? Okay. So let's go back to the PowerPoint presentation. So we have covered this aspect. Just a minute. Let's do this case study 3 also, right? As on at 30th June 2013, at 30th June 2013, a decision is taken to classify property as held for sale. Criteria are met. Held for sale criteria are met. At the time of classification, the carrying value is 2,50,000 and the fair value less cost to sell is rupees 2,60,000. Friends, in the first paragraph, 3 information is given. The date is 30th June 2013 and that date is held for sale date, right? It is a property. So it means this property is moving from Ind AS 16 to Ind AS 105 on 30th June 2013. At the time of classification, carrying value is given and fair value less cost to sell is given. What is lower in this case? What is lower in this case? The carrying value is 250, fair value less cost to sell is 260. What is lower? What is lower? Of course, carrying value is lower. Carrying value is lower. So what is the accounting entry? Non-current asset held for sale account debit to property, plant and equipment account. And at what value? 2,50,000. Is there any impairment loss in this case? Is there any impairment loss in this case? In this case, there will not be any impairment loss. There will be no impairment loss in this particular case, right? There will be no impairment loss in this case. Why? Because the fair value less is higher than the carrying value, and that is why there is no impairment. Upon reclassification, there is no impairment and the property is initially classified as held for sale at 2,50,000. That is what it is written in the question. So this question is there and the answer is also there in this. There is no depreciation of the property after the date of reclassification, right? As we all are aware that once an asset will be classified as non-current asset held for sale under Ind AS 105, no depreciation, no amortization is required to be charged. At the next reporting date, 31st December 2013. So after June, 31st December came and it is the reporting date. The market has declined and so on the reporting date, you have to measure at fair value less cost to sell. And market has declined and the fair value less cost to sell is 2,40,000. Now what to do? This NCHFS is sitting at 2,50,000 at the date of initial recognition, 30th June 2013. Now this value become 2,40,000. So you have to recognize an impairment loss of 10,000. Simple. An impairment loss of 10,000 is recognized in profit and loss. Is that clear? On 31st December. Now subsequently in the month of January, the property is sold at 2,70,000. The carrying value of NCHFS is coming out at 240 in the balance sheet. It has actually been sold at 270. So where the 30,000 will go? What is the accounting entry? Bank account debit 2,70,000 to non-current asset held for sale 2,40,000. Where the difference will go? The difference will go to the profit on sale 30,000, right? So a gain on disposal of 30,000 is recognized in profit and loss. This is what it is written in the questions, right? So this case study 3 only showing you the flow that what happens if fair value less cost to sell is more than the carrying value. You have to apply mathematics. The step number 3 is lower of carrying value and fair value less cost to sell. So carrying value is lower. In that case, there is no impairment loss. Subsequently, it will always be measured at fair value less cost to sell. If fair value less cost to sell will be declined by the original NCHFS value, then in that case, impairment loss is going to be charged. If it is increased, in that case, what to do? In that case, the increase has to be recorded only to the extent of previous impairment losses. Clear? Clear? Any doubt in this case? No? Okay. Friend, you remember while discussing the sale is highly probable, I told you the fifth condition, it is unlikely. It is not likely that the sale plan may change. But what happens if there is a change in the plan of sale? And let me give you a practical example here. There was a private limited company, right? Before COVID, I'm talking about before COVID. The private limited company was having two plants for manufacturing of sanitizer. The private limited company was having two plants for manufacturing of sanitizer. So in October 2019, the company decided to sell one of the plant, right? Because there was no much demand of the sanitizer. I'm talking about October 2019. So prior to COVID, the sanitizer was used only in the hospitals or into some specific areas, right? Everyone was not using sanitizer, right? But after COVID, the scenario has changed. You can find the sanitizer in the bags, in your carry bags. You will find the sanitizer in your office workstation. You will find the sanitizer in your homes, right? So you'll find sanitizer everywhere. Now what happened? This company has decided to sell one of the plant. Why? Because the demand was not that much, and the companies decided that I will continue the manufacturing of sanitizer from one plant and will not use the another plant and will sell that plant, right? So that's what the company has decided. But in December 19, when COVID started in China, in February 20, when COVID came to India, and you all are aware, you all have witnessed that fact. Every company started manufacturing sanitizer, be it Dabur, be it Himalaya, be it Nestle, be it ITC. Everyone started manufacturing sanitizer because the demand of sanitizer has increased like anything. And I know that every 10th house is manufacturing the sanitizer. Every 10th house was manufacturing sanitizer. So this company who wants to sell one of the plant now decided to acquire one more plant, right? So this company who decided to sell the plant now thinking of acquiring one more plant. Now what happened? If this company is thinking to acquire one more plant, will this company sell this plant? Of course, this company will not sell this plant. This company will not sell this plant. Doesn't matter, even though if the company is required to pay a penalty, the company will not sell this plant. But on October 19, the held for sale condition was met. The sale was highly probable. The company has classified this plant from PPE to Ind AS 105. The company has measured and recognized this plant at lower of carrying value and fair value less cost to sell, right? But when it came to February 20 or March 20, the company decided to change the plan. Now the company don't want to sell this sanitizer plant. The company want to use this sanitizer plant. Friends, what to happen now? What's happened now? So now, earlier it moved from Ind AS 16 to Ind AS 105. Now again, it will again moved from Ind AS 105 to Ind AS 16. सो ये जो प्लांट है, ये जो मशीनरी है, पहले ये प्रॉपर्टी प्लांट एंड इक्विपमेंट से 105 में आई, अब ये दोबारा से 105 से प्रॉपर्टी प्लांट एंड इक्विपमेंट में चली जाएगी, राइट? ऑन द डेट ऑफ चेंज ऑफ प्लान. नाउ द क्वेश्चन अराइजेस, when this asset was classified as held for sale, it was reclassified from non-current category to current asset category. That is number one. So now again, it has to be reclassified to non-current asset category. Number two, when this asset was classified as held for sale, the depreciation was stopped from that date. So from October 19, we are not charging depreciation, right? If this would had been a PPE, of course, depreciation would have continued. Okay. So standards has given you a rule. It has given you some steps. It says that on the date of change of plan, when the held for sale criteria not met, when the held for sale criteria are no longer met, the asset shall be removed from the held for sale category. The asset should be removed from the held for sale category, and this asset needs to be reclassified and remeasure at remeasure at lower of. Step number one. Step number one. Compute the carrying value. Had this asset never been classified as held for sale, what would have been the carrying value? Had this asset never been classified as held for sale, what would have been the carrying value? अगर इस एसेट को कभी भी हेल्ड फॉर सेल क्लासिफाई नहीं करते तो कैरिंग वैल्यू क्या होती? राइट? Had this asset never been classified as held for sale, then what would have been the carrying value as on the date of change of plan? If this asset would not never be classified as held for sale, then the accounting may have been continued as per Ind AS 16. Accounting may have been continued as per Ind AS 16, right? Step number 2, recoverable amount on the date of change of plan. Step number 2, compute recoverable amount on the date of change of plan. Step number 3, recognize and measure this asset at lower of step number 1 and step number 2, lower of carrying value and recoverable value. This is what given in the question. This is what given in the question, right? Is that clear? Is that clear, friends? Clear, not clear? Yeah? Clear? Okay. So let me discuss the change of plan. Let me discuss the change of plan with the example which I have already drafted in the Excel in detail. Okay. So let me cover this. Let me cover this change of plan, right? And while covering the change of plan, I'll show you the detail. I will show you the detailed, journey. I'll show you the detailed journey from normal asset to non-current asset held for sale to again normal asset, right? I'll show you the detailed journey. Let me share my Excel and please confirm if my Excel is visible to all of you. Please confirm once it is visible. Is it visible? Is it visible now? This change of plan, is it visible? So let me discuss the complete cycle of a non-current asset held for sale. So I am discussing a complete cycle of a non-current asset held for sale, right? Change in plan of sale. Change in plan of sale. In case of change in plan of sale, the asset is going to be reclassified in the normal non-current asset category again, like in AS 16, 38, and 40. PP, intangible asset, investment property, right? It has to be reclassified. Let's continue with this example and discuss this in detail. This example will clear the entire journey of a normal asset to NCHFS, NCHFS to normal asset. It will complete the entire cycle, entire circle. There was a machinery of a company which is covered under Ind AS 16, right? This machinery was purchased on 1st April 2019. Cost was 5 lakh rupees. Life was 10 years. What is the depreciation per annum? 50,000 rupees per year depreciation. This machinery met the criteria of held for sale, right? So it moved from Ind AS 16 to Ind AS 105. And this machinery met the criteria of held for sale on 31st March 2020. Okay. So what is the requirement of recognizing the non-current asset held for sale? The requirement is NCHFS is required to be recognized at lower of step number 1 and step number 2. Lower of carrying value and fair value less cost to sell. right? What is my carrying value? What is my carrying value? What is my carrying value on 31st March 20? Cost minus accumulated depreciation. Impairment loss is not given in the question. So cost minus accumulated depreciation 4,50,000 is my step one, which is my carrying value as per Ind AS 16. My fair value less cost to sell is given in this question as 4 lakh rupees. What is lower? 4 lakh is lower. What is the accounting entry you need to pass? Machinery account debit, machinery account, NCHF account debit 4 lakh, to machinery PP account, impairment loss debit for 50 lakh, 50,000, right? This is the accounting entry. This is a very simple. This is what we have already covered. Now, after 1 year, from 31st March 20 to 31st March 21, this NCHFS, this machinery ceases to HFS criteria. This machinery is no longer held for sale. Now the company wants to use this machinery. This machinery is used for manufacturing of sanitizer, and now the company wants to use this machinery. So this 105 is again shifted to Ind AS 16. 105 is again shifted to Ind AS 16 now, right? Clear? So now there is a change in the plan of the sale of the asset. Earlier, from Ind AS 16, it went to Ind AS 105. Now from 105, it comes to again Ind AS 16. So now the question arises on 31st March 2021. On 31st March 2021, at what value this PPE is again going to be recognized? So step number one, again it has to be recognized at lower of what? Step number one, carrying value on the date of change in plan had this asset never been classified as held for sale. Second, recoverable value. What is the formula of recoverable value, friends? If you have confirmed me that you have attended Ind AS 36 session, so please tell me what is the formula of recoverable value? What is meant by recoverable value? What is the formula of recoverable value? I am waiting for your answer. What is the formula of recoverable value? Yes, it is higher of fair value less cost to sell and value in use. Neha, it is higher of. It is not only fair value less cost to sell. It is higher of fair value less cost to sell and value in use, right? This is what we have learned in Ind AS 36. It is not lower, Ravi. Abdul, it is not future cash flow into discount rate. That is value in use. So Abdul, you have written the formula of value in use, which is discounted cash flows. Ravi, you have used the word lower. I am asking the formula of recoverable value. What is meant by recoverable value? How will you compute recoverable value? Recoverable value is higher of fair value less cost to sell and value in use. Yukta, you are right. Tanisha, you are right. Okay. Whenever there is a change in the plan, on the date of change in plan, you have to compute the carrying value had that asset never been classified as held for sale. Number two, you have to compute the recoverable value, and at lower value, you need to recognize your normal asset, your Ind AS 16 PP, right? So on 1st April 19, this PP was purchased. On 31st March 20, it was reclassified to NCHF. On 31st March 21, it was again reclassified to Ind AS 16. Step number one, compute carrying value considering machine is PP since beginning. There was no non-current asset held for sale. What was the cost? Cost was 5 lakh. What is the depreciation? Depreciation was 50,000 for 1920. For 2021, the depreciation is again 50,000. What is the carrying value? Carrying value is 4 lakh, right? Simple, we have computed the carrying value. Step number two, compute recoverable value. Recoverable value is 3,80,000, right? Right. So this 4 lakh we have computed. We have 4 lakh we have computed, assuming there was no impairment loss during its PPE stint, during its journey as a PP, right? So the carrying value comes out at 4 lakh simple. The compute recoverable value is step number 2. Recoverable value is 3,80,000. Let's recoverable value is 3,80,000. Okay. I have given this recoverable value in the question. It is 3,80,000. Now, what is the accounting entry? What is lower? 380 is lower. What is the accounting entry? Machinery PP account debit 3,80,000. To machinery NCHF account 4 lakh. This 20,000 will go to impairment loss on reclassification account debit 20,000. Sir, don't you think this 20,000 should go to depreciation? Answer is no. Why? Because the date of change of plan is 31st March 21 for the entire year. This asset remained as a non-current asset held for sale. Means in the entire year, the intent of the company was not to use the asset. The intent of the company was to sell the asset, and this asset was always available for sale. This asset was always available for sale, right? So this is how this accounting has to happen. Again, PP was debited, NCHFS was credited. If there is a difference between these two values, like in this case, the PP was debited by 3,80,000, NCHFS was credited by 4 lakh, right? This is the NCHFS, right? 4 lakh. And the difference has gone to the impairment loss on reclassification, 20,000. This is how this entire thing is going to happen. Is that clear? Is that clear, friends? If this entire journey is clear, then let me take you one of the case study from the presentation from my PPT, right? Case study 5. And this case study will clear all your concept of date of change of plan as well. So we will read this case study and try to solve this case study while reading the question itself. Okay. This is how you will be able to save your time in examination as well. Okay. A property is purchased for rupees 5 lakh, cost is 5 lakh. On 1st January 2019, date of purchase is 1st January 2019. The useful life of the property is 20 years, no residual value. The property is measured subsequently at depreciated historical cost, means cost model. Okay. It means 5 lakh is the cost, 20 year is the life, 25,000 per annum is the depreciation. Yeah. On 31st December 2020, that is after 2 years, 1st January 19, 31st December 19, 31st December 20, after 2 years, it is decided that the property is to be classified as held for sale. Okay. So on 31st December, it is moving from Ind AS 16 to Ind AS 105. Understood. So it means 2-year depreciation will be there. So 5 lakh divided by 20, 25,000. So if 1 year depreciation is 25,000, what is the accumulated depreciation for 2 years? What is the accumulated depreciation for 2 years? 50,000. Okay. An impairment assessment on 31st December 20. So on 31st December 20, there is an impairment assessment also, because impairment assessment is required. If there is a negative indicator, you have to assess the impairment. Okay. An impairment assessment on 31st December 20 determines the recoverable value based on value in use to be 4 lakh rupees. An impairment assessment on 31st December 20 determines the recoverable value based on value in use to be rupees 4 lakh. Right? To be rupees 4 lakh. So carrying value, what is the carrying value which will comes out? 5 lakh is the cost. 50,000 is the accumulated depreciation. 4 lakh 50,000 is the carrying value. But the formula of carrying value is not only cost minus accumulated depreciation. It is cost minus accumulated depreciation minus impairment losses also. So if the recoverable value is 4 lakh, it means under Ind AS 16, this asset requires impairment. It is not due to the fact that it has become a non-current asset held for sale, and that is why you are assessing for impairment. Rather, even though it was PPE, you are required to compute your recoverable value if there is any negative indicator. And if the recoverable value is lower than the carrying value, means after deducting depreciation, then you have to charge the impairment loss also. So what is my step number one? Till this part, it is from Ind AS 16 to Ind AS 105. Same case study which we have already done. And the fair value less cost to sell is also given at 3,90,000. So my step number one is compute carrying value as per the respective standard as per Ind AS 16. So carrying value is equal to cost minus accumulated depreciation minus accumulated impairment losses, right? So it is 5 lakh minus 50,000 for 2-year depreciation minus 50,000 for impairment loss. So 4 lakh is net carrying value as per step number one. What is step number two? Fair value less cost to sell. It is 3,90,000. What is step number three? Recognize NCHFS at lower of step number one or step number two, lower of carrying value and fair value less cost to sell. So what is my NCHFS? NCHFS account debit 3,90,000. NCHFS account debit 3,90,000. To PP 4 lakh. Impairment loss on classification as HFS account debit 10,000. This is what we have already understood, we have already covered, right? This is what it is there. Okay, this is my carrying value as per Ind AS 16. This is my fair value less cost to sell, which is lower, and this 10,000 is impairment loss on classification as HFS, right? This is part one. Now the actual begins. Friends, after 1 year, that is at 31st December 2021, there is a change in plan and the property no longer meet the criteria to be classified as held for sale. There is a date of change of plan which is given. It is 31st December 2021 and this property no longer meet the criteria to be classified as held for sale. There is no change in the useful life of the property at any point of time. There is no change in the useful life of the property at any point of time. The recoverable value at 31st December is given. So one of the leg is given. Recoverable value is given and the life has not been changed. Means when this property was acquired on 1st January 19, the life was 20 years. When this property becomes held for sale after 2 years, the remaining life was 18 years. On 31st December 21, the remaining life was 17 years. So on 31st December 21, there is a change of plan of sale. The 31st December 21 is the date of change of plan. So what to do on 31st December 21? Please tell me. What to do? On 31st December 21, you have to compute carrying value. You have to compute carrying value assuming if this asset was never classified as held for sale. If this asset was never classified as held for sale, then what would have been the carrying value as on today? अगर ये एसेट कभी हेल्ड फॉर सेल क्लासिफाई होता ही नहीं, शुरू से पीपीई में चल रहा होता, तो मेरी कैरिंग वैल्यू क्या होगी? एंड सेकंड स्टेप इज द रिकवरेबल वैल्यू व्हिच इज गिवन इन द क्वेश्चन. सो यू नीड टू कंप्यूट द कैरिंग वैल्यू. गाइस प्लीज टेल मी व्हाट इज द कैरिंग वैल्यू एज ऑन 31st December 2021. This question will also test your concept of Ind AS 16 as well. So Ravi is saying 4,25,000 and I know how Ravi is saying 4,25,000 because he is saying, sir, 25,000 is per annum depreciation. So I will deduct 25,000 for 1 year depreciation. It comes out at 425. Okay. What else? Friends, what about you guys? What about you guys? Please tell me. What's your view? Yeah. Abdul is saying 3,77,778. Ravi is saying 425 minus 50. Manoj Pandey is saying 3.9 lakh. So different answer from different students. First of all, please tell me, had this asset never been classified as held for sale, अगर ये asset कभी held for sale नहीं होता, so what was the carrying value as per step number 1 PP? What was the carrying value as on 31st December 20? 31st December 20 पे carrying value क्या थी as per PP standard? I am asking a simple question. Forget about step number 2. When this asset was classified as held for sale, forget about fair value less cost to sell. Please tell me what is the carrying value of this property as on 31st December 2020 as per Ind AS 16. I am asking that question. 31 दिसंबर 2020 पे कैरिंग वैल्यू क्या थी एज पर Ind AS 16? एंड प्लीज also let me know the formula of carrying value. At multiple times I am asking this formula. What is the formula of carrying value? Because I have seen with my experience there is a mental block in the mind of the students that whenever I am saying carrying value, it always means cost minus depreciation. Answer is no. The formula of carrying value given in 7 standard is cost minus accumulated depreciation minus accumulated impairment losses. So please tell me the simple question. I am asking, what is the carrying value on 31st December 20, not 21, 31st December 20. You guys have computed that value. Friends, you have computed. This is the value. This is the value as per PPE standard. 5 lakh was the cost. 50,000 was the accumulated depreciation. Another 50,000 was the impairment loss. 4 lakh was the carrying value as per Ind AS 16. This is what you have calculated. Now, if the carrying value is 4 lakh as on 31st December 20, in the remaining 18 year of life, this depreciation has to be charged on which value? 450 or 4 lakh? अगर मेरी आज की कैरिंग वैल्यू 4 लाख है तो मेरा डेप्रिसिएशन प्रोस्पेक्टिवली इसी वैल्यू पे लगेगा ना. If my today's carrying value is 4 lakh, I'll compute depreciation on 5 lakh, that is 25,000 per annum. So in the next 18 year, my depreciation will more than my carrying value. My net block will become negative. Are you getting me what I'm saying? If you will always apply your depreciation on the basis of original value, probably your net block will become negative at some point of time if there was an impairment during the life of this asset. So the depreciation has to be applied prospectively on the basis of the closing carrying value. So the closing carrying value on 31st December 20 as per PPE standard is 4 lakh, not 4 lakh 50,000. It is 4 lakh. अगर ये एसेट हेल्ड फॉर सेल नहीं भी होता तो भी 4 लाख रुपए इसकी कैरिंग वैल्यू होती. वाई? इंपेयरमेंट लॉस चार्ज करना पड़ता. वी हैव टू चार्ज द इंपेयरमेंट लॉस. So now this 4 lakh needs to be applied, needs to be depreciated prospectively over a period of 18 years. 18 years means remaining 18 years. Now what is the depreciation? What is 4 lakh divided by 18? What is 4 lakh divided by 18? What is 4 lakh divided by 18? It is 22,222. Yeah. So carrying value prior to reclassification is held for sale on 31st December 24 lakh. Depreciation charge for year 21 is 22,222. How it came? 4 lakh divided by 18, remaining life. Your carrying value divided by remaining life. So carrying value as on 31st December 21 would have been 377,778. One of the student has given the right answer in the beginning. What is the recoverable value? It is 3,85,000. Which is lower? The lower is 377,778. So PPE has to debited by 377,778 and NCHFS needs to be credited by 390. The 12,222 differential of 12,222 will go to where? Will go to where? It will go to where? It will go to? It will go to impairment loss. It will go to impairment loss, right? Clear? Is that clear? I hope it is clear to all of you now. Is that clear or not clear? Please let me know if it is not clear still. Not clear? Clear? Okay. Let me explain this again on the Excel file. So the case study 5 from PPT in plan of sale. Cost is 5 lakh, life is 20 year. Cost is 5 lakh. Depreciation in the year 1, 25,000. Carrying value at the end of year 1, 4 lakh 75,000. Remaining life is 19 year. Now what happened? Depreciation in year 2. How to compute the depreciation in year 2? Closing carrying value divided by remaining life, 25,000. Value after depreciation comes out at 4 lakh 50,000. Impairment is 50,000. Carrying value at the end of year 2, 4 lakh, right? Remaining life is 18 years. What is the depreciation in the third year? Divide by closing carrying value divided by remaining life. 22,222. So carrying value at the end of year 3, as per PP standard, 377,778. What is my step 1? Compute carrying value on December 21, considering this asset was never classified as held for sale. It has comes out at 377,778. Recoverable value 385. What is lower? 377,778 is lower. Accounting entry at the time of change of plan. PP account debit 377,778. NCHF is 3,90,000. Impairment loss on reclassification 12,222. It will go to P&L. Right? Clear? I hope now it become absolutely clear to all of you. It become absolutely clear to all of you now. Yes? Yeah? So these standard you are able to revise or recap the concepts of Ind AS 16, Ind AS 36 as well. So friends, it's 8:32 now. Let's have a 8 minutes break and we will start at 8:40. Right? If you have any question, please put your question on the query box or query link of ICAI. After break, I will answer your question. Okay. So we have covered this change in plan of sale also. Now we have reached to the last part of the session, which is discontinued operations, which is discontinued operations. What is meant by discontinued operations? So far we have understood individual asset held for sale, disposal group held for sale. In disposal group, it is a group of asset which may include current asset as well, and it may include liability as well. I have shown you the Hindalco Industries annual report also for disposal group. Now, what is meant by discontinued operations? Discontinued operation. For understanding discontinued operation, let's understand operations first, right? When an operation has to be termed as a discontinued operation, when an operation has to be termed as a discontinued operations, so that operation has to be termed as a discontinued operation, or a component of business has to be termed as an operation that component comprises if that component comprises operations and cash flows which can be clearly distinguished from the remaining business. Sir, what does it mean? First of all, let's understand what is meant by component. Component is like a cash generating unit. It is like a segment. Okay. Tata Motors Limited. So Tata Motors is into the manufacturing of private vehicle as well as commercial vehicle. Private vehicle as well as commercial vehicle. So the Tata management wants to understand that what is the operations, what is the operational performance, as well as what is the financial performance from their private vehicle business and from their commercial vehicle business. Tomorrow, if the Tata Motors will decide that let's discontinue the commercial vehicle segment because we are doing pretty well in the Nexon and Tata Punch, right? We are doing pretty well in this private vehicle car. Then why to give more focus on the commercial vehicle car? Because you must have heard or you must have seen in earlier days Tata Indica car was one of the famous car for the taxis, right? For the commercial vehicle, Tata Indica. But and no one wants to purchase that Tata Indica car at least for the private consumption, right? But nowadays you can see out of every 3 and 4 car, one of the car is Tata Nexon or Tata Punch. Okay. So the Tata has come up very well in terms of this market where there is a huge demand for Tata cars, right? Private vehicle cars. So for Tata Motors management, there are two segments, there are two components, right? There are two different operations which can be considered as a component or as a segment. Why? Because they are evaluating the operational performance as well as financial performance of these two segments separately. So these are known as operations. These are known as a component. So what is a discontinued operation? Discontinued operation is a component of an entity. It's a cash generating unit of an entity, right? Which has been disposed of or has been classified as held for sale, right? And which represent a separate major line of business, which represent a separate major line of business, which represent a geographical area of operation, or which is a subsidiary acquired exclusively with the view to resale. I will explain this aspect. But before that, have we understood what is a discontinued operation? So discontinued operation is those operations, those component, right? Those area of the entire business to which the management evaluate the operational performance and financial performance separately. To which the management evaluate the operational performance and financial performance separately. This is known as a operation and discontinued operation. Now, friends, when I have started this standard, I have shown you the objective slide. In the objective slide, I have told you that this standard gives the accounting for asset held for sale and presentation and disclosure requirement of discontinued operation. So this standard only gives the presentation and disclosure requirement of discontinued operation. What does it mean? Whether this standard does not talks about the accounting of discontinued operation. First of all, first of all, let me ask you one question. Whether all the discontinued operation includes disposal group held for sale or not necessarily. Whether all the discontinued operation, अगर कंपनी कोई भी ऑपरेशन डिसकंटिन्यू करती है, so whether it includes group of asset held for sale or not necessarily that it will include group of asset held for sale. Tell me, if the company is discontinued any operation, whether it will always includes disposal group or not necessarily that every time it includes disposal group. What is your view? It includes or it will not include? Abdul is saying not necessary. You are right, Abdul. Let me explain discontinued operation and how it is related to disposal group with the help of this example. Let's say I am teaching financial reporting in Gurgaon Center, Gurugram Center. Okay, I am teaching financial reporting. I have a separate institute. I don't have, I'm just giving an example. I am having a separate institute where I have a separate building where I have a, I have taken a building on a rent basis. I have separate furniture, classroom, water purifier, your air condition, whiteboard, projector, staff, everything is separate. Books, library, everything is separate. I have a separate institute in Delhi where I used to teach auditing. Okay. So I have a separate staff. I have a separate rent I am paying for that audit institute. Separate furniture and fixture is there, water purifier, water dispenser, library, books, projector, air condition, everything is different, right? And my students, my registration is also different. So my registration is separate in financial reporting vertical, registration is separate in audit vertical, right? I'm evaluating that whether my financial reporting business is more profitable or my auditing business is more profitable. I can already demarcate that what is my staff salary in that institute, what is my expenses in that institute, audit institute, what is my registration income, what is my tuition fee which I'm earning by providing the coaching for that institute, right? I am already evaluating the operational and financial performance and cash flows from both the different institutes. So I decided to discontinue my audit operations. I want to discontinue my audit business, which is in Delhi. Is it an operation? Is it a separate operation? Yes, both are the separate operation, right? So if I decided to discontinue, whether it has become a discontinue operation, answer is yes. So now in my audit institute, I have furniture and fixtures, chairs, tables, right? I have a furniture and fixtures. I have whiteboard, projector, computer, laptop, air condition, water purifier, and water dispenser, right? I have all these assets in my audit institute. Now I have two options. Option number one, I will dispose of the entire group of assets, right? Probably someone who wants to start the coaching institute, he will come and he'll purchase all these assets from me. So I'm ready to dispose of all the group of assets. So what is this? When I'm saying that I'm disposing the group of asset, what is that? That is disposal group held for sale, right? Of course, my audit business is getting discontinued. Whatever revenue, whatever expenses I'm incurring and earning from audit business, it will be discontinued. My one of the operation is getting discontinued, which includes the disposal group, held for sale, because I want to sell this entire asset to some third party. Option number two, I'm not selling any asset and I am using the assets of a discontinued operation in my existing business. So I want to expand my financial reporting institute, and whatever furniture, fixture, whiteboard, computer, laptop, air condition, whatever group of assets are there, I am using those group of assets in my financial reporting institute. I have taken one more floor in Gurgaon and I am using these assets there. In the option number 2, whether it will be a discontinued operation? Yes, operation will be discontinued, irrespective if I want to sell the group of asset and I don't want to sell the group of asset. Operations are discontinued. Going forward, I will not be able to earn revenue from the audit business. Going forward, I'll not be required to incur expenses in the audit business. But in the option number 1, this discontinued operation includes the disposal group held for sale. But in option number 2, this discontinued operation does not include group of asset held for sale. I hope it is clear to all of you. I hope it is very much clear that all discontinued operation does not include disposal group held for sale. Right? So Abdul, Ravi, Neha, Ridvik, you all were right who were saying that it is not necessary that all the discontinued operation will include disposal group held for sale. You all are right. So friends, if a discontinued operation includes a disposal group held for sale, in that case, first of all, the accounting part of disposal group held for sale will be there, which we have already read, which we have already understood, right? And there are some additional requirement relating to the presentation and disclosure of discontinued operations. If the discontinued operation does not include disposal group held for sale, then those presentation and disclosure requirement will only be there. The accounting part will not be there. Is that clear? Is that clear to all of you? Friends, is that clear or not clear? Discontinued operation, operations, right? Discontinued operation. If discontinued operations includes disposal group held for sale. If discontinued operation includes disposal group held for sale, please write down. Then the accounting means measurement requirement is for disposal group plus presentation and disclosure, additional requirement for discontinued operations, right? If discontinued operation does not include disposal group held for sale, let me write it as a HFS, right? In that case, no measurement and only presentation and disclosure of discontinued operation, right? Only presentation and disclosure for discontinued operation, right friends? Now you have understood that discontinued operation includes disposal group held for sale and it may not include disposal group held for sale. If Tata Motor decided to discontinue its one of the important vertical like commercial vehicle operations, right? One of the important segment, which is commercial vehicle segment. So it may include whatever machineries are there, whatever infrastructure is there. So it may use those infra for its expanding its private vehicle business, right? Or it may sell this infra to some other automobile companies, right? So if it decided to sell, it will become it includes disposal group held for sale. If it does not decided to sell, decided to use, it will not include disposal group held for sale. Right? Now, this discontinued operation, now we have understood it is like a segment. It is like a segment. It is like a component. Okay. And which includes disposal group held for sale, or it may not include disposal group. Now, friends, it says that a discontinued operation is a component, a segment of an entity which represent a separate major line of business or geographical area of operations. For example, if Tata Motors will decide tomorrow that I will discontinue my commercial vehicle business, it will be a discontinuation of separate major line of business. If Nestle will decide tomorrow that I will discontinue my Maggie business, and Maggie is one of the important segment, important business, then it will be a discontinuation of major line or major product line of the business, right? It will be discontinuation of major product line. Okay. This represent a separate major line of business, discontinuation of a separate major line of business or geographical area of operation. For example, if tomorrow Tata will decide that I will discontinue my business in China, so this is the discontinuation of geographical area of operations. When I started my session on Ind AS 105 in the last class, I have given 3 examples. Example number 1 was I decided to sell my factory, right? And when a buyer came to me, I told that buyer that I want to sell the factory only in terms of factory building. So that was an individual non-current asset held for sale. Then another buyer came to me and he convinced me to sell the entire factory as a whole. That was a disposal group held for sale. Then I was having 2 factories, right, in Delhi, or even 1 factory, but I wanted to shut down that factory and I wanted to open a new factory. But the third buyer, when he came to me, he told me that please discontinue your business in Delhi, take a premium from me, and please don't do this business in Delhi. You can do this business in any other area, in any other geographical area of operation you can do, but you can't in Delhi NCR. So what is that? That is a discontinued operations, which includes disposal group held for sale, right? Which includes disposal group held for sale. So whenever it is held for sale, either it will be an individual asset or it will be a disposal group. But whenever it is a disposal group, you need to look at is whether it is also a discontinued operations or it is not a discontinued operation. If it is a discontinued operations, then the discontinued operation includes the disposal group where the accounting is happening as per disposal group and the additional presentation and disclosure requirement will be there. I will discuss what is the additional presentation and disclosure requirement, right? So what is a discontinued operation? It is a component of an entity which represent a separate major line of business or geographical area of operation, or it is a part of single coordinated plan to dispose of a separate major line of business or geographical area of operation. For example, normally what happened, let's say Ford wants to discontinue the business in India. So what they do? They decided to stop their manufacturing in eventually and gradually. For example, they have 5 factories. So they told that, let's say they are also into the business of private vehicle and commercial vehicle, let's say. So they want to discontinue the commercial vehicle business. So they have 5 plants across India. They told that we will discontinue the production of commercial vehicle one by one in our all the plants, so that we will be able to discontinue this entire commercial vehicle operations by end of the next year. Let's say they have taken this target. So it is a part of a single coordinated plan to dispose of a separate major line of business. Second, let's say the Tata Motors wants to be out of China market. So they have a plant in Beijing, they have a plant in Shanghai, they have a plant in Jeonju. So they have 5-6 plants in entire China. So they are discontinuing those plants, right? So they are discontinuing the major geographical area of operations, and it is a part of a single coordinated plan to discontinue from that geographical area of operation gradually and eventually. Or it is a subsidiary acquired exclusively with a view to resale. The company has acquired a subsidiary, but the objective of the subsidiary acquisition of subsidiary is to sell that subsidiary. So this is the meaning of discontinued operations, right? This is the meaning of discontinued operation. Now we'll discuss these two examples here. Company XYZ has 5 different operating segments, one of which solely produces consumer goods. All of the consumer goods production facilities are situated in Central Europe. XYZ also has other operation in Central Europe and other operating segments, right? In April 2001, XYZ disposed of its consumer goods segment, which meets the definition of a component of a business and represent a separate major line of business and would therefore be considered as a discontinued operations, right? Therefore, it will be considered as a discontinued operations, right? Second example, let's discuss from this case study. Sun Limited is a retailer of a takeaway food like burger and pizzas. It decided to sell one of its outlets, located in Chandni Chowk in New Delhi. The company will continue to run 200 other outlets in New Delhi, right? The company will continue to run 200 other outlets in New Delhi. All Ind AS 105 criteria for held for sale classification were first met on 1st October 2016. The outlet will be sold in June 2017. See, this company wants to sell one of the outlet. They have 200 more outlet in New Delhi, right? And they want to sell this outlet. So of course, held for sale criteria is met. The outlet will be sold in June 2017. They have entered into an agreement. Management believes that outlet is a discontinued operation and wants to present the result of outlet as a discontinued operation and wants to present the results of the outlet as a discontinued operations. Please tell me whether the contention of the management is right. Let's answer 3 questions. Question number one. Whether this discontinuation of an outlet, sale of the outlet, one outlet, it represents a discontinuation of a separate line of business or major product of the business. Whether the company is discontinuing the burger and pizzas? Answer is no. The company is only discontinuing one outlet. The company is not discontinuing the operations of the major product line. Right. Question number 2. Whether the company is discontinuing from the geographical area of operation like a state, whether the company is moving from a Delhi. The company has just shut down its one of the outlet which is in Chandni Chowk. Probably they have 200 outlet in Delhi. So probably just 500 meters away or 1 kilometer away, there could be another outlet of this company. So it means the company is not discontinuing its operation, its geographical area of operation as well. This component does not reflect the discontinuation of a geographical area of operation. Question number 3. Is it a subsidiary which is acquired exclusively with a view to resale? Answer is no. So what could be the right answer for this particular outlet? The right answer would be yes, it is a disposal group held for sale. It is not a discontinued operation, and hence the additional presentation and disclosure requirement of discontinued operation will not be there. The Chandni Chowk outlet is a disposal group. It is not a discontinued operation. As it is only one outlet, it is not a major line of business or geographical area, nor a subsidiary acquired with a view to resale. Right? Is that clear? Is that clear or not clear? Friends, please let me know if you have any problem. If you have any question, please let me know. Yeah? Okay. Let's discuss this case study from ICAI study material. Then we will discuss the presentation and disclosure requirement of discontinued operation. Identify whether each of the following scenario gives rise to a discontinued operation and disposal group held for sale or disposal group held for sale, right? MNO, a company, disposes of a component of the entity by selling the underlying asset. It disposes of a component. So it is a discontinued operation. Answer is yes. By selling the asset, it is written that by selling the assets. The sale transaction is incomplete at the reporting date. It may be incomplete at the reporting date, right? So whether it is held for sale, yes, this discontinued operation also includes disposal group held for sale. This is a discontinued operation and this is a case of disposal group held for sale also. You all agree with me now? You all agree with me? PQR has ceased activities that meet the definition of a discontinued operation. It is itself written in the question that it meets the definition of discontinued operation without selling any asset. You remember my example? You remember my example of Financial Reporting and Auditing Institute, option number 1, option number 2, Tata Motors. Yeah. So it is a discontinued operation. It is given in the question. Is it a disposal group asset held for sale? Is it a asset held for sale condition? Answer is STU ceases activities and has already completed the sale of the underlying asset at the reporting date. STU ceases activities. STU ceases activities and also completed the underlying asset at the reporting date. Underlying asset at the reporting date, right? Underlying asset at the reporting date. Oh, I think my PPT is not visible. Just a minute. Is it visible now? So in question number 1, it was yes, it was yes, it was yes, it was no. STU ceases activity and already completed sale of underlying assets at the reporting date. So considering these activities are like a component, so it is a discontinued operation. Is it an asset held for sale? It is written that and has already completed the sale, on the reporting date. On the reporting date, there is no disposal group held for sale. They have already completed the sale. They have already completed the sale. Although it was disposal group held for sale, but on the reporting date, nothing is left. They have sold out everything. So they have actually sold out everything. That is why it is not a disposal group held for sale, right? Otherwise, it was a disposal group held for sale. VWX will sell in future or has sold some assets that are within the scope of Ind AS 105 but does not discontinue any of its operation. It means it is a disposal group held for sale, but of course it is given in the question that it is not a discontinued operations. Is that right? Is that right? Is it clear? Is it clear to all of you? Yes or no? Friends, is it clear to all of you? Yes? Yeah? I hope it is clear to all of you. Is that clear? Now, let me take you on the presentation and disclosure requirement of discontinued operation. Right. Let me take you on the presentation and disclosure requirement of discontinued operation. Please let me know if you have any question. If you have any question, then please let me know. Do you have any question? No? Abdul, disposal group. Disposal group is a group of asset which is held for sale, right? Simple. But if that disposal group impacts in a discontinued operation, if it is a segment, right? If it is a segment, and what is a segment? What is a discontinued operation? We have understood that discontinued operation is a component which represent the discontinuation of a major product line, major line of business, or major geographical area of operations, or it is a subsidiary acquired exclusively with a view to resale. This is the difference between disposal group and discontinued operation. Discontinued operation is much bigger than the disposal group, right? The operation may be discontinued and there may be a sale of the group of asset, there may not be the sale of the group of the asset. You remember my auditing and reporting example, financial reporting example, right? And I hope my PPT, my Excel file is visible. Why it is important to disclose the result of discontinued operations separately, right? I'm giving you a scenario and then you will be able to understand this thing. The company has 3 operations, A, B, and C. The company has 3 major products, A, B, and C. A and B was for full year, right? The company has sold A and B for full year and they have generated a revenue of 1500 crore. The company has discontinued operation C. The company has discontinued the manufacturing and trading of product C on 31st December during the year. So this C product was sold only for 9 months and there was a revenue which was earned by the company is for 500 crores. The total revenue was 2000 crores, which the company has earned in 2020-21. Now the company has two options and you need to tell me what is the better option to present in the P&L. Option number one, the company is presenting in its profit and loss account revenue from continuing operation 1500 crores, revenue from discontinued operations 500 crores, the total revenue is 2000 crores. That is option number one which the company has. The second option, the company will simply show revenue from operation which is 2000 crores. Now the question is, what is the better presentation, option number one or option number two? Option number one or option number two? Please tell me what is the better presentation in the P&L. Ravi is saying option number one. What about others? Neha is also saying option number one. Rahul is saying option number two. Friends, why financial statements are prepared? Financial statements are prepared for the user of the financial statement, right? Let's say I am the user of this financial statement. I am the shareholder. Okay. Now what happened? What happened? This 2000 crore revenue, if I am the user of the financial statement, when I see option number two, I'll say, oh, the revenue of the company is 2000 crores. So I am taking decision for the future, whether I should invest in this company, I should not invest this company, I should join this company as an employee, I should not join this company. So I am taking a perception for the future. I'm making a perception for the future. Now what happened? Today, when I'm talking about 2000 crore, one fact is not reflecting in this 2000 crore, and that fact is the sustainable revenue of this company is not 2000 crore, it is only 1500 crore. Out of this 2000 crore, 500 crore belongs to a product which has already been discontinued during the year. So going forward, in future, the company will not earn revenue from that product number C. So as a user of the financial statement, I should be aware of the fact that the operations which are continued, the revenue from these operations are 1500 crores, and the operation which is already discontinued, the revenue, because the revenue has earned during the year, because this product has been discontinued during the year, so the revenue from discontinued operation is 500 crores. So I need to aware about this fact that 500 crore of revenue is not a sustainable revenue, and this revenue will not come in future, right? And that is why option number one becomes important. Friends, of course, this major product has been discontinued and it is required to show the revenue from continuing operation and discontinuing operation separately. But if I talk about the asset, if let's say one of the machinery was manufacturing C product, there was some infra, there was some factory which is allocated to the production of C. But management is not selling that factory, not selling the machinery. Management is using the machinery and factory for the enhancing the production of A and B, right? And that is why, of course, is it a discontinued operation? It is a discontinued operation. But whether this discontinued operation includes disposal group held for sale, answer is no. But if the management wants to sell the factory and machineries, of course, this discontinued operation includes disposal group held for sale. Sir, what happened with the disposal group held for sale? When it becomes a disposal group held for sale, the entire assets, the disposal group held for sale has to be measured at fair value less cost to sell. The carrying value needs to be computed and it has to be measured at lower of carrying value and fair value less cost to sell. If there is a loss, that loss needs to be recognized in P&L and that loss needs to be allocated to the group of the assets, right? And how you need to allocate, I have told you. And that disposal group held for sale has to be shown separately in the balance sheet. In the P&L, only impairment loss will come. But this revenue has to be shown separately from continuing operation, discontinued operation. Sir, why only revenue? Why not other item as well? Because if you will discontinue some operation, you will not earn revenue in future, but you will also avoid the cost in future also. There were some saving in the cost also. So answer is right. Friends, standard says that entire P&L of discontinued operation, the revenue, cost, tax, right, everything for discontinued operation has to be presented separately. Now there are two options for presentation. Option number one. Option number one. The company should present simple continuing operation. The company will represent revenue from operations, expenses, profit before tax, tax and profit after tax. After that, the company will give discontinued operations as a caption and profit before tax from discontinued operation, tax from discontinued operation, profit after tax from discontinued operation. Then company club continuing operation plus discontinued operation, and then there will be a profit from total operations. In that case, the entire P&L of discontinued operation, the company can provide in the notes to accounts, and only profit and tax the company can give on the face of the P&L. That is one option. Option number two, each and every line item in the P&L, the company will show separately. Revenue, continuing operation, discontinuing operation, expenses, continuing, discontinuing, tax, continuing operation, discontinuing operation, PAT, continuing operation, discontinuing operation. Which option you preferred most, whether option number one or option number two? Option number one is the entire P&L relating to discontinued operation can be given in the note to accounts, and only the profit has to be taken from there with a note reference, so that if a user wants to see the entire P&L, they can see the entire P&L, right? Or in every line item, the company needs to show the continuing operation and discontinued operation revenue, expense, and tax separately. Which option you will prefer, option number one or option number two? Friends, in option number two, in this particular case, the P&L will become very messy. So normally the company prefer option number one only for the sake of clean presentation, right? Let me show you one of the annual report of Hindalco Industries Limited. I hope this Hindalco Industries annual report is visible. I hope it is visible, friends. Is it visible? Hindalco Industries annual report? Yeah. So I have already shown you the disposal group held for sale, liabilities relating to disposal group held for sale. Now let me take you to the P&L. Let me take you to the P&L. I hope this P&L is visible. Can you see continuing operation? There is an income, there is an expense, right? From continuing operation. There is a PBT, profit and loss before tax. There is a tax expense. There is a profit or loss from continuing operations. Then there is a caption called as a discontinued operation. The profit before tax is there, and the tax impact is there, and there is a profit or loss for the year from discontinued operation 1699. Please see note number 50. Please see note number 50. Okay, I'll show you note number 50. So this is a profit after tax from discontinued operation, and then there is a total profit or loss for the year, which includes continue as well as discontinued. There are only two line items, right? Only two line items, and the entire P&L is given in the note number 50. Let's take you at note number 50. Let me take you on the note number 50. Okay. Just allow me a minute so that I'll open that note. That note number 50. Okay. And please remember this 1699. Viraj, Tanisha, please remember 1699. 1699 crore. I'll show you this number in note number 50. The financial performance of the discontinued operation for the year ended 31st March 2021 is as follows. Total income, total expenses, Impairment loss, since it is a disposal group also, impairment loss recognized as a result of remeasurement at fair value less cost to sell, lower of carrying value and fair value less cost to sell. This is loss before tax. Then if there is a loss, there will be income tax benefit. Then there is a loss after income tax. There is an actual gain on sale of discontinued operation, tax impact. And now you can see that the actual profit or loss from discontinued operation, which is 1699, right? This is what we have seen that. This is what we have seen, right? This impair this loss from discontinued operation. So the entire P&L is given in the note number 50. Dear student, have you got some comfort after looking this fact in the annual report of this listed company? Yeah, Hindalco Industries Limited, one of the Nifty 50 company. Have you got some comfort or no? Now, I have shown you this part, note number 50. And then, friend, in earning per share in P&L, it also says that you have to provide the earning per share from continuing operation, earning per share from discontinued operation, earning per share from the total operations, earning per share from the total operations, right? Is that clear? Yeah. Clear in mind or not clear? Please let me know if you have any concern. If still you want some clarity, I would be happy to provide the clarity. This is the solution. This is the presentation and disclosure requirement, which I have already covered, that either a single amount can be given and the entire P&L can be given in the notes to accounts, or the analysis of the single amount can be given item by item, right? This is what I have already shown you, the presentation. This is what I have already shown you in the Hindalco Industries annual report. Now let's come to the comparison. Before that, please let me know if you have any query. Anisha, is it clear? Yeah. Coming to the difference between IFRS 5 and Ind AS 105, there is no difference. Between Ind AS and AS, as I told you, accounting standard 24 only talks about discontinued operation, but Ind AS 105 covers non-current asset held for sale and discontinued operation, right? In Ind AS 105, detailed guidance is given. In Ind AS 105, detailed guidance is given for classification as held for sale. But in AS 24, it only talks about discontinued operation, and non-current asset held for sale is covered under AS 10 and AS 26, right? Which covers property, plant and equipment and intangible assets. So if I talk about this AS 10 and AS 26, detailed guidance is not provided. Detailed guidance is not given, right? So coming to the measurement presentation, Ind AS 105 talks about measuring this asset at lower of carrying value and fair value less cost to sell. But in AS 10 and AS 26, it talks about measuring the asset at lower of net book value, which is of course carrying value, and net realizable value. In accounting standard, the word net realizable value has been used. In Ind AS and IFRS, the word is fair value less cost to sell. Right? So this is a difference between Ind AS and accounting standard. Now quickly discuss some multiple choice questions that I would be able to understand about your understanding. Shall I move forward? An entity can continue to depreciate an asset even if it classified it as a non-current asset held for sale. Is it right or wrong? It is right or wrong. Whether entity can continue charging depreciation even though when it classifies it as held for sale. Right or wrong? B. Abdul is saying B. Neha is also saying false. Rahul is saying false. Yes, it is false. It is not right. It is false. asset classified as held for sale must be presented under the appropriate asset head with a separate disclosure in the note. Means if it is a PP classified as held for sale, it has to be shown in PP only. If it is intangible asset, it has to be shown in the intangible asset only. Is it right? No. The asset held for sale has to be shown under a separate line item, which is an asset held for sale or disposal group held for sale, not under the appropriate asset head. It has to be shown as a separate asset head, right? False. This is also false. Under Ind AS 105, an entity is committed to distribute, the asset or disposal group to the owners. That is the asset must be. Must be what? Asset must be what? Must be available for immediate distribution in their present condition, and the distribution must be highly probable. Available for immediate distribution in their present condition, and the distribution must be virtually certain. Available for immediate distribution in their present condition, and the distribution must be reasonably certain. Available for immediate distribution in their present condition, and distribution must be virtually certain. What is the right option? Of course, A is the right option. You're right. A is the right option. Right? How to measure a non-current asset? A non-current held for sale. How to measure a non-current asset or disposal group that ceases to be classified as held for sale? So it is asking that if a non-current asset held for sale ceases to be classified as held for sale, then how it is going to be measured? If it is no longer meet the HFS criteria, if it no longer meet the held for sale criteria, then at what value it is going to be measured? You remember I have told you that it has to be measured at lower of what? Step number 1, compute carrying value had this asset never been classified as held for sale. Second, compute recoverable value. Step number 3, recognize this asset at lower of carrying value and recoverable value. So what is the right answer? It has to be recognized at lower of carrying amount had the asset never been classified as held for sale, and recoverable amount. Lower of carrying amount on the date asset ceased to be classified as held for sale, and lower of carrying amount on the date means whatever is already there. No, you have to compute that. So this is not the right option. Lower of carrying amount and fair value, no, right, not a right option. Lower of carrying amount on the amount which would have been, no, not a right option. So what is the right option? Lower of carrying amount which would have been had the asset never been classified as held for sale, and recoverable amount. So A is the right option. A is the right option, right? Is that clear, friends? A is the right option. Is that clear? Is that clear? Is that clear or not clear? I have covered the entire Ind AS 105 in detail. In the next 2 minutes, I will do the entire revision. And in between, if you have any question, I would be happy to answer. Right? We have understood and we have discussed in the last 2 classes that whenever an asset has been classified as a non-current asset, when it meets the held for sale criteria, it will cover under Ind AS 105, right? Current and non-current classification is as per Ind AS 1, but when a non-current asset meet the held for sale criteria, it comes under the category of held for sale. It comes under the category of Ind AS 105. Then we discussed there are 3 aspects in Ind AS 105: individual asset held for sale, group of asset held for sale, which is known as a disposal group, and discontinued operations. A non-current asset or a disposal group will be classified as held for sale if 2 conditions will be satisfied. The asset or disposal group should be it should be available for immediate sale in present condition, and the sale must be highly probable. That is number 1, right? What is meant by sale must be highly probable? When 5 conditions will met, management is committed to sell, the management started looking buyer,
the management is quoted a reasonable price. It is likely that the sale will be completed within 1 year, and it is unlikely that the sale plan will change, right? There is an exception to 1 year rule, and the exception was number one, if there are some circumstances, there are some exceptional circumstances which has delayed the sale transaction, unexceptional circumstances which has delayed the circumstance which delayed the sale beyond 1 year and which is not within control of entity. In that case, it will continue to classified as held for sale. Second, if it is delayed due to buyer, but the binding agreement has already been signed, then also it may continue to classify as held for sale. Then we discussed if an asset which is lying idle and it will be used when the demand will come, in that case, it will be termed as abandoned asset. It will not be termed as a non-current asset held for sale. Then we discussed the accounting aspect, and we discussed that whenever the asset will be converted into a non-current asset held for sale or a disposal group held for sale, you need to compute the carrying value on the date of classification as held for sale. The carrying value will always be as per the respective standard. Then you need to compute the fair value less cost to sell, and you need to recognize your non-current asset held for sale or disposal group at the lower of carrying value and fair value less cost to sell. If fair value less cost to sell is lower than carrying value, then impairment loss will be recognized in the P&L. Subsequently, on the reporting date, you have to remeasure this non-current asset held for sale at fair value less cost to sell. If fair value less cost to sell further decline, you have to recognize further impairment. If fair value less cost to sell increase, you have to recognize the increase only to the extent of previous impairment losses. Please remember, previous impairment losses includes impairment loss under Ind AS 105 plus impairment loss under previous standard, right? And once the asset have been classified as held for sale, depreciation and amortization will be stopped. Okay, right? Friends, if the cost to sell, if the management is expecting that the delay will be beyond 1 year, then cost to sell will be discounted to the present value. Okay, I have already covered this aspect in the Excel file. Okay, friends. So what about disposal group? In case of disposal group, step number one, compute the carrying value of the respective assets, right? Compute the fair value of the disposal group. Whatever is the impairment loss, it has to be allocated as per Ind AS 36, right? First goodwill, then in the remaining asset on a pro rata basis. Okay. Then we have discussed what happens in case of a change in plan of sale. In case of change in plan of sale, at the date of change of plan, you have to measure the asset at lower of recoverable value, and the carrying value had the asset never been classified as held for sale, right? This is what we discussed in the change of plan. Then we discussed discontinued operation. Discontinued operation are those components whose operational and financial performance can be evaluated separately. These are those components, those segments which represent a major product line, major line of business, major geographical area of operation, or it is a subsidiary acquired exclusively with a view to resale. Okay. In case of a discontinued operation, it may include disposal group, it may not include disposal group. If it may include disposal group, the accounting will be as per disposal group, and the additional presentation and disclosure requirement will be there for discontinued operation. Why additional presentation and disclosure requirement is there? Because not necessarily every time your discontinued operation will include disposal group. If it will not include disposal group, still the company has cut down one of the major operation, right? And that is why the company is required to provide that what financial performance the company will forego in future due to this particular operation, right? And the standard says that there are two ways of giving this in the P&L. Number one, you can give line by line the continuing operation and discontinued operation, or you can show the entire P&L of discontinued operation in the notes to accounts, and you can just pick profit and tax, and you can club with the continuing operation, and it will give you the profit and loss for the full operation. As far as earning per share is concerned, the management is required to provide the earnings per share, basic earning, diluted earning for continuing operation separately, for discontinuing operation separately, and for the total operation separately, right? So these three kind of earnings per share is required to be given. Sir, if in this year it becomes a discontinued operation, Then what about the comparative last year? In the last year, it was not a discontinued operation. In the last year, everything was come as a continuing operation, right? But in this year, it will come as a discontinued operation. Like you have seen in Hindalco Industries, you can see in Hindalco Industries, while looking at this discontinued operation disclosure, you can see there was nothing in the last year. Only numbers were there in the current year, right? Because in the last year, it was a continuing operation. So the revenue from this operation is already, your expenses is coming in the upside only. Okay. But in this year, it has become a discontinued operation. So the last year number will not be restated. Okay. Because last year it was a continuing operation. This year it is a discontinuing operation, right? So friends, this is what we have discussed in this particular standard, right? This was an aerial view of recap of this entire Ind AS 105. I hope you guys have understood this standard very well. You have enjoyed the session very much. And I would request you to please solve all the questions of study material and revision test paper to have a, to have a recurring confidence on this particular standard. But the concepts, whatever question you will solve, the concept will be these concepts only, right? Let me know if you have any question. Otherwise, I would be happy to conclude the session. There is no question. Student, thank you for attending this standard, attending the session very patiently. Thank you so much and being so interactive. Thank you. Bye bye. Take care.